Hello, good morning. Um, I receive a lot of emails as usual and a lot of comments about the selection of stocks, how I select my stocks. Well, um, in swing trading, there are two major entries to buy a stock, two major ones. Okay, so there is from the resistor line to go up or from the support line and to go up. These are two measures that most of the people use in swing trading. But for me, I always prefer from the resistance line, the first green candlestick from the resistance line. Now, why is that? The reason for that is that I am sure 100% that this is the resistance line. Now, in the support line, you will never know. So what's the reason? Because if the trend is going down, the stock will go down for many days. Let's say it goes down for 5 or 6 days, 1 week or second week. And then it goes down a little bit. And you think that it is the support line and you begin to buy. And then after a few days, it goes down again to the support line and goes down. And this is the beginning of a downtrend. It's not an uptrend, it's a downtrend. And there is too much risk if you want to do shorting stocks in swing trading following the downtrend. There is a big risk, what I call unlimited risk. Okay? Why I say unlimited risk when shorting? That's why for me, I don't short most of the time. 99.99 in the whole year I don't short. Even though the market is down, I don't short. Now, you tell me, why is that? Because of the risk associated with shorting. If you short when you are day trading, you can exit the trade during the day and that's it. But if you are doing swing trading, the risk when you do short selling is so big. It can be what we call unlimited. Now, what does it mean, unlimited? It means, let's say you buy a stock at $10 and you short it. You see that the stock is going down, let's say from 12, and it's going down and down and down to 10, and you think that the stock is going down. So you short it. Maybe this company has problems or whatever. Okay? And you think that this stock from 10, it can go to 5 or to 4 or to 3 because you have heard and you have read a lot about this company. It's your way of doing business. And one day, it goes to $9, but the next day, we have good news or whatever happens in the market, and you find your stock is $30. From 9, it jumps over to $30. So you are losing 300% of your money. What does it mean? It means you lose all your money, and then you should bring to your broker $18,000 more than $9,000. Let's say you buy $9,000 and you short it as a stock. Okay? So this is the risk in shorting a stock using, for example, the support line. Now, for the resistance line, I like it because you are sure that the line, resistance line, is the resistance line. You have no doubt in it. But support line, no. Support line, you should do a lot of attempts. And this, why most of the beginners, They like the support line. They like when the stock is going down and down and down. They want to buy, and they think that stock will go up and up, and they make a lot of money from this. As most of the when they see a chart, a beginner, when he sees a chart, he wants the bottom, which is the bottom in the chart, and he wants to go to the end of the trend. But this, you can't do it if you attempt many times. Now, if you attempt many times and you don't succeed, you should have money to do this strategy, which is costly. Okay, it's a costly strategy. You should lose a lot of money many times, attempts. This is what we call hit or miss. Okay, but a lot of beginners, they do it and they think they can make it, and most of the time they lose money. And when the stock is going down, they lose more money, and they feel that they shouldn't sell their stock. Not yet. They think that the stock will go up again, but it didn't, and they lose more money. And these big losses that you do in the year is the catastrophe of your trading strategy. Okay? As a rule in trading. Now see, you are doing trading, you are not doing investing. In trading, it is a catastrophe to lose too much in a trade. Okay? Now, for me, I prefer the resistance line, and I buy it on the green candlestick, the first green candlestick, and I leave it. I leave it. If it goes up, I am making money for sure. And I am in the trend. Maybe in the beginning, maybe in the middle. I don't care that much. Okay? For me, I just want to make some money. Wherever I am, wherever I discover the stock. This criteria, there are a lot of criteria. I use only 2 major criteria. But as you might know, this is what I am teaching, and this is what my strategy is. I can't give you for free this kind of information. Either you do my training, or you go to the membership training course, or you buy my ebook, which is the whole strategy. This is the way to do business, because this kind of information is so precise, and it is based on the price only. It means when you are doing business and you are buying through my criteria, they are 2 simple criteria. You are not looking at the news, or watching the Dow, or watching the indexes, or watching wherever you want to watch. All this is not important, because I don't use what the other people do use. Okay? I don't use trading news or company financial, or wherever you want to mention. Okay? My strategy is based on the price only. Price. How can you know that someone is buying? It's just because of the price. You see the price is going up, and you begin to see the trend. And the trend is not a straightforward line. The trend is going up many days. Then we have small correction. It goes 1 day or 2 or 3 down. Then it goes up again. Then it goes down. It goes up. But when you see the chart, you see that there is an uptrend. And this is where the money is in the stock market as a swing traders. Because swing traders, what are they? They are people who profit from the stock when it trends. That's it. I don't want to stay 10 years waiting for the stock to someone buy it in order, or mutual fund buy this stock in order that the stock goes up. For me, I follow opportunities in the market. When I see there is the beginning of a trend through my criteria, I discover these stocks daily. It means for me, how do I work? I have my own stocks that I bought through this criteria, and those who continue to go up, I leave them. Those who go down, I just exit them with a stop loss, because I am not a fool to leave a stock without a stop loss. Okay, because a hedge fund who has billions of dollars, when he wants to short a stock, he has power, he has money to put any stock down. Okay, so he has the power. So I'm not a fool to leave my stock crushed by this mutual fund. Understand that this is business. He wants the stock to go down by force because he is selling all the shares on the market. Now, if you buy some shares and you are thinking the stock go up, but the stock is going down, and you don't exit with a stop loss that you calculate, okay, what will happen to you? You will lose too much. Now, when you lose too much, you lose 20%, 30%, 50% of your money in this stock. Okay? What do you hope for? You stay in this stock and you hope that the stock will go up to your purchase price. Let's say the stock was $20, now it's $10. Now what do you hope? This is a beginner hope. You hope that your stock, it was 20 when you bought it, but now it is $10. What do you hope? You hope that this stock is $10. It goes to $20 in the future, and from 20, at least 20 in order to get your money, because you feel that you lost money and you don't want to lose. And this is a beginner's idea, that you shouldn't lose. You are in a risky business, so you should allow losing little money. And the problem is, you should never leave your stock to lose too much money. 10%, 20%, 30%. What are you waiting for? You are waiting for until your stock going to 80% or 90%, or the company go bankrupt? What are you waiting for? Okay? So this is the whole strategy that I am following. It is a so simple strategy. It works for me. It works for my students. It has worked for everybody. But what does it need? It needs some work. It's not for the lazy people. Okay? If you are thinking that you get whenever you buy a stock it goes up and you make money, this is a ridiculous beginner's idea. You should grow up and think seriously about trading. If you want to become professional trader in the future, okay, you should learn the right way, okay, to buy, to hold when the stock is going up. I don't hold a stock when it's going down against me, because it is taking my money. I have a tolerance, okay? I calculate this stop loss through the ways I do, and if it reaches certain amount of money, I am out of this trade. Okay, I don't want to lose more money. Okay, and this is how to conserve your principal, your account. Okay, if you begin with 5,000 or 10,000 or 50,000, 100,000, wherever your money is, you should preserve your money the whole year in order to make money, not to lose money. Okay, you can lose little money, but not too much. If you tell me, oh, last year I lost 50% of all my money of my account. Oh man, 50%. What have you been doing? 50%. In order to make this 50% next year, you should make 100%. Okay? Let's say you have $10,000. In the whole year you trade, and at the end of the year you find $5,000. It means you lost 50%. Now, in order to make $10,000 again, this $5,000, you should make $5,000 more to have $10,000, and this is 100% of your money. So when you lose, it's not the same as when you win a trade. When you lose, it becomes very difficult to regain your money. Okay? So this is the general thing about my entries. It means how do I enter, how do I buy a stock, and I showed you many ideas how the people do and what is the best ways. For me, the best way, as I told you before, is to buy when the stock is going up. I have explained in just last video, if you can check it please, about the market and the stock. Okay? Or someone told me, always sending me emails, oh, the market is down, I am out. No, you are out, you yourself, but other people, some of the stocks go up, but you are not in. Now why? You don't know how to trade, you don't know how to select your stocks. Okay? And losing money is something normal in the stock market. So don't be frustrated to lose money. But the main idea in trading stocks is that you should never lose too much money in each trade, because it is a catastrophe. You will never make it as a professional trader if you lose too much in each trade. So you should learn how to do stop loss calculations. You should know how to trade. You should learn if you don't know, because through the years you will be spending too much money on trying instead of taking a training or having a ready-made strategy and you try it. Okay? At least it gives you clear ideas about the market, how to enter, how to get out, how to make money, how to follow a trend, how to do position trading, position sizing. All this is calculations. Some people, they think that stop loss is just, okay, you go down, you buy by 20, you put just 19 or 18 and that's it. No, it's not like this. And this is the idea. That's why people, I see beginners, they don't want to learn about these things that makes the money. Okay? They think that there is a magic formula where we buy a stock, it goes up, they make money. This is stupid and ridiculous, because professional trader, they can't make it like this. They can't just buy a stock as if they know the future. No one knows the future. And if someone tells you that I have 100% or 95% and I'm always winning trades, this is, in general, this is a liar, because there is no, you can't predict 100% what will happen in the future, because you can't control it. A hedge fund, you buy a stock today, tomorrow a hedge fund short the stock and your stock is going down. What can you do? You can do nothing. And you can't predict that. You can't read the minds of other traders, what they are doing. If it is so easy, all will become billionaires in 1 month or 2. Okay? So stop thinking that trading is a sure thing. Trading is not a sure thing. Okay? So you should have probabilities set up to your trades in order to make money. Okay? That's why you don't rely on one stock to make money. Okay? For me, I rely on many stocks to make the money, not one stock. I don't put all my money in one stock and think I am sure that the stock will go up. No, never. Because if I do this and then my stock go down, I will lose too much money, and I risk to lose that much, and I can't make it later. Okay? So this is the business. But you know, the business costs money. No one will give you strategy that makes money for free. Forget about it. Okay? You go online and you search how you buy a stock. Okay? The entry. You find a chart that it is full of indicators, clouds, colors like this, and they give you old information. It means he trades from the past. If someone wants to trade, you ask him, trade for the future, not for the past, because the past is very easy. If I show you a chart, a stock was $10, it goes to $20, and I ask you a simple question, where do you enter? You say, oh, I enter here in 10. Where do you exit at 20? Oh, that's good. You are a professional trader right now. But in life of trading, it is not true that a professional trader knows where the stock begin to go up and when it goes down. No one knows for sure. But the professional trader have an entry, a purchase price, and a selection of stocks, and then he follows the stocks. If the stocks go up, he will make money for sure. But if the stocks go against him, he will get rid of them and replace them. This is how I work, and this is how I make money in the stock market. Okay? Please, if you have any questions, just comment, thumb it up, or subscribe if you don't. If you need special attention or something very important, you can email me. The email is always on the top of the description. You just email me and I will see how can I help you. Thank you very much.